Hey everyone, I hope you guys are having a great day. This is the second video in our series that pertains to different types of mortgage financing. If you guys had the opportunity to watch our first video, it was pertaining to government financing, which includes FHA, VA, and USDA, of which government financing can only be used for primary residence transactions only, whereas conventional financing, which we're going to talk a bit about today, can be used for transactions for primary homes, vacation homes, which are also known as second homes, and investment properties. That's really one of the primary differences between government financing and conventional financing is the uses. In addition to that, conventional financing is going to have different credit score requirements in a lot of cases, as well as different down payment requirements for the different types of properties. So first and foremost, whereas we talked a bit about government financing having more flexibility as it pertains to credit scores and credit profiles, conventional financing, for the most part, requires a minimum credit score of 620. There are some, I won't say loopholes, but there's some flexibility with that, but not much. And it would take a bit longer to go through and explain. But for all intents and purposes, the minimum credit score requirement for conventional financing is typically going to be 620. For a primary home, the minimum required down payment that's available is going to be 3%. Now, the 3% option for down payment has a couple of stipulations. First, either one of the 3% down programs requires that you be a first-time home buyer, which doesn't mean that you've never owned a home before. It basically means that you have not owned real estate in the last 3 years. That essentially means that you are a first-time home buyer. The other stipulation is the other 3% options that are available have an income limit associated with them. So you can't make too much money, otherwise you're not able to use that specific program. Beyond the 3% down payment options, 5% is the minimum required down payment that's available to most everybody. And that is on a primary residence transaction only. When you move onto a vacation home, again, also known as a secondary residence, the minimum required down payment is going to be 10%. Then when you move on to an investment property, the minimum required down payment is going to be 15% in that instance. Now, rates can also vary between the different, basically the uses of conventional financing between primary, second home, and investment. And we've talked a little bit about this before in other videos. Essentially, your primary home is going to be the lowest risk property use, if you will. If you get into financial trouble and you have multiple properties, you're likely going to do what's necessary to keep your primary home. Higher risk translates into higher rate. So for that reason, primary residences are always going to carry the lowest interest rates out of the 3 different property classifications. Second homes have traditionally mirrored primary home interest rates, but recently there's been some changes and some adjustments made to that, where second homes or vacation homes moving forward will have interest rates that mirror investment property transactions more so than what they have in the past. And then investment properties traditionally had your highest conventional mortgage rates because they are considered to be the highest risk property classification, if you will. There can also be some differences in regards to rates as it pertains to different property types like manufactured homes, condos. When you get into multifamily, conventional mortgages can be used to finance up to 4-unit properties. But once you cross over into multi-unit, which is anything 2 through 4 units, the down payment requirements are going to be a bit different. And then the interest rates are going to be different as well. So again, the primary differences between conventional financing and government financing are going to be your minimum credit score required. Also the down payments required. And then also there can be some differences as it pertains to requirements for reserves. Just more guidelines, it's more strict guidelines associated with conventional financing when compared to government financing. Again, remember before I mentioned that government financing exists to essentially promote home ownership and make it easier to obtain home ownership, whereas conventional financing has multi-uses, but it's a bit harder to qualify for. Typically, and not in all cases, but in a lot of cases, the higher that your credit score is, the more likely that it will be that you'll want to use conventional financing. And that can be for several different reasons. One of those reasons is anytime you put less than 20% down on a home, regardless of whether it's for a primary home, secondary, or investment property, you're going to have monthly mortgage insurance, or PMI. Now, PMI on government financing is typically set. It doesn't vary significantly from credit score to credit score. Whereas on conventional financing, both interest rates and PMI are much more dictated by credit score. And so as your credit score moves up, the PMI on a conventional finance or a conventional loan is going to go down. So at a certain point, it makes more financial sense to use conventional financing as opposed to government financing, because your PMI and your overall monthly payment are going to be less as a result. Also, PMI on a conventional loan is going to eventually fall off in most cases once you reach the desired equity position, which is typically 20%. Whereas on government loans, if you have monthly PMI, there's a good chance that it is going to be there for the life of the loan. It may never come off. So if you're planning on staying in that home for an extended period of time, you want to be in a position where you get a loan where the PMI will in fact drop off at some point in time. So there is a lot more detail involved with conventional financing, just because of the different uses, the different down payment requirements. So certainly, something that if you have any questions about or want additional information, if you're trying to decide whether or not conventional financing or government financing is best for you, please reach out to us. More than happy to talk to you and answer any questions that you have and provide any additional helpful information for your decision-making process moving forward. Thanks for listening. Have a great day.